Alright, everyone, welcome back to Crypto Brain. And before we begin today's breakdown, make sure you subscribe because here we focus purely on structured analysis, market behavior, and smart money activity, rather than emotional hype. And if you want to stay ahead of major crypto moves, this is exactly where you need to be. Now, today's headline is extremely serious and cannot be ignored. SPX6900 holders warning big crash because right now the structure forming inside SPX6900 is starting to show early signs of a potential downside expansion. And what makes this situation dangerous is that most retail traders are still looking at this as a normal pullback, while the underlying behavior suggests something much bigger could be building. As we go deeper into the chart, the first thing that stands out clearly is the shift in momentum, because earlier we were seeing strong impulsive moves to the upside, but now that aggression has started fading, and the market is transitioning into a weaker structure, where each bounce is becoming less powerful, and this is usually one of the earliest warnings before a larger correction begins. Now, when momentum slows down like this, it is not just about price, it's about control, because strong trends require strong participation, and what we're currently seeing is participation starting to weaken, while volatility remains unstable, which creates the perfect environment for smart money to begin distributing positions. This is where whale behavior becomes extremely important, because large players do not exit positions randomly. They do it strategically during phases where retail still believes the mark is strong, and right now SPX6900 is showing signs of that exact environment where price is not crashing yet, but confidence is still present, which allows whales to slowly offload without triggering panic immediately. If we look at the structure more carefully, we can see that price is struggling to hold higher levels, and instead of creating strong support zones, it is forming weak bases that can easily break under pressure, and weak support is one of the clearest signals that if selling begins aggressively, there will not be enough demand to absorb it quickly. Now, coming into the critical zone, this is where things become very important, because SPX6900 is approaching a level where a breakdown could trigger a chain reaction, and in markets like crypto, breakdowns are rarely slow. Once key support fails, price tends to move rapidly because liquidity disappears and panic selling begins. If this level breaks with strong volume confirmation, then what we could see is a fast downside expansion where price drops aggressively as strapped buyers rush to exit positions, and this is exactly how crashes be. Not from obvious weakness, but from hidden distribution followed by sudden breakdown. At the same time, we cannot ignore the psychological factor, because markets are driven by perception, and right now the perception among many traders is still bullish, which actually increases the risk, because when the majority is positioned in one direction, the market of 10 moves the opposite way to create maximum efficiency. Another layer to this situation is the narrative factor, because SPX6900 has been gaining attention, and whenever attention increases, it brings in late buyers who are often the most vulnerable during reversals. And if the narrative starts weakening at the same time as the structure breaks, then the downside move can accelerate even faster than expected. This is why the current phase is not about prediction, but about preparation, because the signals we're seeing right now are early warnings, not confirmations. And the difference between the two is what separates smart traders from emotional traders. The smartest approach right now is very simple. Number 1, identify the key support layer. Volatile prices holding. Number 2, watch for volume expansion during any breakdown. And number 3, pay close attention to how price reacts after the breakdown, because if there is no immediate recovery, then the probability of a larger crash increases significantly. If breakdown confirmation appears, then the crash scenario becomes dominant, and we could see a sharp move downward that catches the majority off guard. But if price somehow manages to hold and reclaim strength, then this structure could stabilize temporarily, however, based on current behavior. The risk is clearly tilted towards downside pressure. So right now, SPX6900 is sitting at a critical point where the next move is likely to be decisive, and the traders who understand what is happening beneath the surface will be the ones who react correctly, while the majority will react too late. And this is exactly why staying analytical matters, because in crypto the biggest losses happen when warnings are ignored, and the biggest opportunities come when signals are understood before the move actually happens. Stay disciplined, stay aware, and watch the structure closely, because if this breakdown confirms, the move that follows could be much faster and much stronger than most people are currently expecting.